Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. Yeah, the financials. And this is for Wednesday, the 13th of November, 2024, and the time right now about 7:10 p.m. Central Time. So most of the picks are in from President-elect Trump, and I'll tell you, my jaw's dropping on some of them. I'm not convinced they're qualified for the jobs he's giving them. We'll see what the Senate has to say unless he's able to do an absentee manner of getting these people appointed. But I do think that there's going to be a lot to be discussed here. He appointed as Attorney General today a man that is under still investigation in the House for sexual charges. Let me think. The president's appointed this. Oh, yeah, they might know each other. I'm being facetious, of course. We saw the Attorney General has been appointed. We've seen the Defense Secretary. That's another one that I'm sure if you're a military career man and you're up there, you might have a problem with this gentleman. So we'll let that go unsaid. But we now are waiting for the big one, the Treasury Secretary, to see where that's going to come in. We saw today the President-elect meet with President Biden in the White House. If you notice, the fireplace was on. That's a tradition that's normally done. Trump did not give that to Biden, but Biden certainly gave that to Trump. There's word, I was reading tonight, where they want Biden to now step down as president during the last 60 days or so to give VP Harris the presidency. I'm going to ask you, why? Why would he do that? He's much more capable than she is. He stayed here, you kept him in office all this time, and let the man go out gracefully. I think America's crazy sometimes with what we hear. Energy prices still under pressure. I don't know if you're reading the EIA report. I covered it tonight in my full research, and it's not a pretty sight. They're not looking for demand to pick up that much. Bonds and notes, they continue to add yield. So the CPI numbers today, sticky, are still saying the market's not buying into the idea that the Fed has to cut interest rates in December. Now, keep in the back of your mind, today's CPI is going to get another CPI before the Fed meets in December. So you've got another full set of PPI and CPI coming up in December. So don't get too nutty with these numbers that are coming out right now. We're going to get in the morning the PPI, the price producer price index. They're looking for month over month, the raw number up 0.2, but when you go to the core, they're looking at it up 0.3. So we'll see if those come out. Neither of those are big numbers to move the market one way or the other. You're looking at a classic, and I've seen this in the markets before, a classic washout to no reality where they just wipe traders out of a market. This is not like the cocoa market for the gold market where you can't get the product, it's disappeared. This is the Trump win. And the Trump win has set interest rates sharply higher. Yes, sharply. Trump win has sent the dollar off to the races. It is put, remember I told you, you're probably going to get under a 106 number. You're going to get a 105 print in there with the euro. You're there right now. Most currencies still under selling pressure in the marketplace. No change there. As the dollar goes higher, it weighs on everything. The grain markets have been feeling that pressure. You're looking at the corn, instead of 450, back to 426. Wheat's been especially under pressure. And a market that's gotten beat up is the oil market, the soybean oil market, just gotten beat up terribly in here recently. So in the S&P, for the week, if we were to close right now, you actually wouldn't have a gain. It feels like you have a gain, doesn't it? It does to me. I don't know about you. But you're actually down for the week if you close 0.18. But boy, it feels like we've had a gain all week. But what the market's really done is it's gone sideways. And it's gotten up on this stilt, and it's up here, and the question is, what's it going to do up there? The pattern is one of a lower low, a higher high. The 18-day average of support's back in roughly the 5,900 level, about 100 points lower than this in raw terms. The Bollinger Band, you hit 3 days in a row and you've backed off to the sidelines, and the market is not embedded, it's overbought. Not the type of market that I would tell people to go fresh into. If you didn't catch the move off the election, you wait. Same thing going on in the NASDAQ, identical. Now, if they embed, I'll get excited, and that occurs when both numbers are going sideways over 80 for several days in a row. You don't have that just yet. In the Dow, I mean, you talk about a vertical move to the upside, my gosh. And now the market's backed away from the Bollinger Band, going sideways right through there. And we're looking at the Russell coming from down to up, and it's stepped out of its uptrend completely now, and momentum is turning down on it. So I hate when you get those type of moves in there, because your dollar risk, if you try to jump in, how do you place it? And everything to me in trading is about the risk. You will get right trends and you will get wrong. When you're wrong, how do you get out? That is the hardest thing. And you will get caught somewhere along the line in the futures market. It's inevitable that it happens if you're active in it. In the 10-year note, lower highs, lower lows, and you can see how you're in oversold territory, again down to the lower band. I'll let somebody else want to have that market. The trend is down, period. Nothing else you can say, and it is oversold. You're trying to re-embed in the 5-year note. So you can't count today because we don't know where the market's going to finish for Thursday. But we can look at Wednesday. Both numbers were under 20. I can look the day before, they were under 20, not the day before. Tomorrow's a crucial day. If we embed and then you get a rally, the traders, the pros are probably going to sell the market. They'll bail if the red line loses the bearish embedded reading, if it gets it. Right here against the Bollinger Band, you enjoy it. I don't want any part of it. In the dollar, you've got 7 days in a row now of running the band, but 4 days in a row of over it. You rarely get beyond 5. So this is where the market starts, to me, being susceptible to a pullback of sorts. So I'd be a bit careful, which means the flip-flop in the euro, I can see it moving to the right-hand side, oversold market. And no, I am not calling for a top in the dollar and a bottom in the euro. It's not what I've said. I said you can get corrections now in the markets, not trend changes at this point. The British pound is just looking around and going, why am I staying up? That's what I believe going on. And it, too, is now 3 days in a row, 2.5, because you got to count tonight, is a quarter maybe, that the market is staying under the Bollinger Band. Bitcoin has had a phenomenal run up to 93,000 in the market, 94,095. So this market is just absolutely come alive. If you've held on to your Bitcoins from the beginning, you're very rich. I know people are talking now the 100,000 mark, and they're probably right. I want you to listen. They're probably right. Remember, this is once people bought into it, once the ETFs came alive and it became an investment vehicle, you changed everything. I still find no use for it other than, and I want to make this clear, other than a storage of value. But in all honesty, I don't wear an awful lot of gold either. And gold, if you buy it, it's a storage of value too. So think about it that way, and you come around to the thinking that the people that own this are going with. In the crude oil market, I'm telling you, high interest rates. I'm looking at Germany. Germany's losing its government right now. Mr. Schultz is calling for the vote of confidence. He'll lose it. They'll have a February election. He won't be chancellor anymore. And the people coming into power, he's a moderate. Wait till you see what you're about to get there. But that's them. What about us? High interest rates, but we've got productivity and everything going. Okay, but that's not the way it is everywhere. What about China? Nothing but problems. Who's one of the biggest buyers in the world of crude oil? China. If their economy is slowing, what do they have to get all that for? All right? That becomes the big problem in the market. When you look at our crude, WTI, down. Now, the EIA came out today with all kinds of numbers as to what they think our production will be like in both natural gas and crude. I cover it tonight in my written updates for people, so that's where you've got to look at it. Last in the heating oil, and we'll get to the natural gas, just drifting around here at the 18-day average, void of a trend, total sideways market from my perspective. And nat gas has had a nice rally. You had an outside day to the upside. I've told you I think the market will have nothing but problems right here. I continue to believe that. It's up a bit because of problems that they had with production and so on, but now that Hurricane Rafael is gone and other logistic problems are there, that's going to go away. The EIA does think that the drillers, because of these low prices, will cut back on production. But what you've got in storage carries you for the winter because they're not going to cut that much back. Just be a bit careful here. I'm thinking the short side more than the long side longer term. Short term, the trend is up until you take out today's lows, but you are overbought. If you're one of those traders that uses TradingView, my whole suite of indicators is available in it. The swing lines, the moving averages I use, my version of slow stochastics, which don't match up with yours. I'm sure you realize that. Outside days, I love to highlight them on charts because they're so important as to a continuation or an end of a move pattern. Very, very important. Of course, window envelopes, and you have to be a subscriber and you get my version of all that. But it's all there. 6 indicators. Takes up what we call 2 pairs on that if you understand what you're doing. Very easy to work with. And yes, you can modify everything you want. This all ties in with my courses, by the way, and everything else that I do. So I do hope you consider that. How do you get it? You simply go to our website at iraepstein.com. You go to the top right. It says Client Resources. Give it a click in there. You will see the TradingView indicators. That's where you sign up. We'll get the notice that you want them. We turn them on and away you go. iraepstein.com. It'll be an icon up on the top. You can give that a click as well. I'm Ira. You have yourself a great evening. I'll catch up with you in the morning.